Hi there, this is Bruno from Spainguru.es, and this is the Spanish Taxes Overview 2025. Today, Thursday, September 11th, 2025. A little bit about Spainguru. We have wonderful reviews on Trustpilot and Google, so you're in good hands. Our objective is facilitating the relocation process for English-speaking foreigners to Spain since 2014. You can use Spainguru.es for absolutely free. You can join our weekly newsletter, our YouTube channel with more than 1,000 videos. You can read our articles, almost 2,000 articles published, and you can join our vibrant community with an aggregated total of 150,000 members with dedicated groups and general groups for people moving or living in Spain. Apart from our free services, you can also read our sections, which are the Move to Spain checklist, the destinations featuring 13 destinations in Spain where most expats move to. And of course, I can recommend you my personally vetted professionals, specifically tax advisors, who are knowledgeable of taxes in Spain for Spain filings and also filing in the US. You can also connect with financial planners, okay, and wealth planners that you can trust. Okay, so not only those professionals you can find on Spainguru.es, go into the top menu, services, tax advice, but also you can find immigration experts and all the related services if you're applying for visas or just moving to Spain. Remember that this presentation is for general information purpose only and not legal or financial advice or tax advice. For personal guidance, please consult with a qualified advisor that you can find on Spainguru.es. Spainguru is not liable for errors or outcomes from using this information. However, I hope that when you end this webinar, you take a few things from it, 4 of them to be specific. The first one, and most important, at least gain an overview of Spanish taxes and understand the key tax categories in Spain and learn the basic principles on how things work here in Spain in terms of taxation. Second, prepare informed to have more informed conversations with tax advisors so you can engage with them more effectively. Sometimes I feel that I speak a different language when I engage with a specific sector professional, but hopefully this webinar will give you the right vocabulary and understanding to engage more effectively so you can ask more precise and informed questions. Next, clarify the role of a professional tax advice because this webinar will only provide you with general information and it will never replace personalized tax advice. There's so many variations of your tax implications depending on your personal situation. So please take advice from me in general in the terms that go with professionals before deciding to move to Spain. And finally, hopefully you will identify some considerations like potential tax implications with focus on the US and UK nationals, but I would say that 95% of the content of this webinar applies to anyone moving to Spain. And you will be aware of compliance requirements and deadlines, the calendar to avoid potential penalties. So all these things, I hope that you will get covered in this webinar today. Now let's start with Spanish tax residency. You become a Spanish tax resident and therefore must pay taxes on your global income to Spanish tax authorities and potentially on the value of your assets if you spend more than 183 days in Spain. Remember that the tax calendar year in Spain starts on January 1st and ends on December 31st. So every January 1st, a new tax year begins. If you spend 183 days or more during a calendar year, you become a tax resident in Spain. The days don't need to be consecutive. It could be 10 days at the beginning of the year, plus 30 days later, plus etc., right? And it doesn't matter the immigration status. It doesn't matter if you're a tourist. It doesn't matter if you spend those days holding a visa or a residency. It doesn't matter. Your physical presence is the only thing that counts. And 1 second on Spanish soil will count as 1 day. So take that calculation with you. Then there could be other options as well, or conditions. If you spend less than those days in Spain, but your main economic activity or primary income is sourced from Spain, you could also be deemed to be a tax resident in Spain, or if your family lives in Spain. Okay. Therefore, if you, for example, you haven't spent a single day in Spain within a calendar year and you arrive after July 2nd and stay in Spain until the end of the year, you'll be on the safe side because you'll spend only 192 days in Spain. Therefore, during that calendar year, you wouldn't become a tax resident in Spain. Now, if you spend one day more, then it will be retroactive from January 1st, that same calendar year. So any taxable events happening before but after January 1st, you could be liable to pay tax to Spanish authorities for those tax events. So always verify your travel records. And also, if you're moving from one jurisdiction to another, sometimes both jurisdictions could consider you to be a tax resident in both jurisdictions. In those cases, always refer to double taxation agreements between those two countries, as they usually hold tiebreaker rules that will determine in which country you're a tax resident during that calendar year. Of course, always consult with the tax advisor, right? So we said that once you become a tax resident in Spain, you will start paying taxes on your global income and potentially on the net value of your assets. Now, if you're a non-resident, you could potentially also pay taxes in Spain if you have income sourced from Spain. And there are two let's say possibilities. Either you are an EU passport holder or you are a non-EU passport holder. And for the different types of income you could source from Spain, you will have different tax rates. For example, if you own a property in Spain and you rent it out, that rental income is income that you need to pay tax as a non-resident. And for example, if you're a non-EU passport holder, you will pay a 24% tax on that income. Now, let's talk about the different tax systems or regimes and obligations in Spain. So there's basically two regimes: the ordinary or common regime and the special tax regime, also called the Beckham law. The general regime includes personal income tax, the regional wealth tax, okay, the national solidarity tax, and the 720 informative forms for declaring overseas assets. Now, let's talk a little bit, before going into the general tax regime, let's talk about the special tax regime, Beckham law. You have to know that in most cases, only employees who move to Spain for work are the ones that could be eligible for the special tax regime. If you move to Spain as a contractor, 1099 freelancer, it's almost impossible that you are considered to be eligible for the Beckham law. Okay, that's important. Now, there are some pros and cons about the special tax regime Beckham law. The most common advantages is that you will only pay a flat 24% tax rate for your employment income in Spain. You will not pay taxes on your income worldwide income. Okay, you will not have a requirement to submit a 720 form or pay wealth tax, for example. There are some cons, and that's why most tax advisors will recommend you to go with the general tax regime instead of using the Beckham law if you make less than 55,000 euros taxable income per year, because there are additional administrative burdens that may outweigh the benefits. You will not potentially be eligible for family deductions and allowances. Therefore, if you make less than that threshold, it would probably make more sense to go with the general tax regime. Now, if you make more, definitely you should study the possibility to go with Beckham law. Now, let's talk about the first tax obligation. We mentioned the overseas assets reporting, or 720 form. This is not a tax that you pay. It's a form. It's a form that you fill out so that the Spanish tax authorities receive information from you. Now, when you become a tax resident in Spain, you have the obligation to present a full disclosure of the assets and rights that are held outside of Spain. And the way it works is that you will classify your assets and rights held abroad by categories. For example, bank accounts, real estate, investments, cryptocurrencies, right? Now, if the total sum of the value in a certain category is 50,000 euros or more, then you have to declare everything inside that category. For example, if you have 5 bank accounts with 10,000 euros in each, the whole category for bank accounts will be 50,000 euros. Therefore, you need to declare the existence of those 5 bank accounts, right? This is the way it works. Now, you don't have to present this every year after it, unless there are variations of more than 20,000 euros by category, or if there are assets closures, okay? And the submission deadline is March 31st, okay? And normally, if you work with a gestor or tax advisor or an accountant that will present this for you, which I highly recommend because it's quite complex, in my opinion. Even if your native tongue is Spanish, it's hard to understand really the guidelines on how to present this. So really, I really highly recommend you going with a professional. You will start preparing all these filings on January 1st. Now, the second tax obligation is the personal income tax filing, or IRPF, Impuesto a las Personas Físicas, okay? Where, depending on the type of income, you will pay progressive tax brackets for ordinary income. And inside ordinary income, we have the salary, rental income, business earnings. You will pay progressive tax rates that start from 19% up to 47%, with some variations, because a part of this is the regional variation, okay, in the taxes, a little bit like the United States in that sense. And then you have investment income that has lower tax rates that go from 19% to 30%. And inside investment, you have dividends, interest, capital gains tax, for example, right? And the deadline to present the annual personal income tax is June 30th in Spain, okay? And you would pay, for example, for year 2025, you will pay it with the deadline June 30th, 2026, okay? And normally you will start preparing this on April 1st, so always allow 3 months to prepare this type of taxes. Now, if you're working in Spain as an autónomo, okay, or contractor, freelancer, you also have to pay income tax on a quarterly basis. And normally you would be paying about 20% of your income on a quarterly basis. And then in the annual payment, you will pay the difference. You will still need to pay more probably. So normally you would have to pay also on an annual basis. You will be paying, let's say, 5 times a year your income tax. Okay. There are other things that you need to do as an autónomo, but we're talking about income tax right now, okay? Now, a little focus on U.S. citizens. As you know, if you're an American passport holder, you need to file / pay taxes in the U.S., even if you are not an American tax resident, okay, and you're living, abroad for 20 years, you still have to file taxes in the U.S., right? And the deadline for those taxes is normally April, right? So if you live overseas, you have an automatic extension until June 15th. So the way that most Americans do it is that they pay their taxes, they file their personal income tax before June 15th. In Spain, they get the certificate from the Spanish tax authorities saying how much taxes they have paid. And thanks to the double taxation agreement between Spain and the US, they can use that amount that they paid for income tax in Spain to credit for the taxes that they should pay in the US, therefore not paying taxes twice on the same thing. Okay, so this is the way you can do it. And also you can file another extension that goes until October. Okay, you will have to pay some interest always when you file extensions with the US, but the let's say the easiest and safest way to do it, although there is a discussion among Americans, like, should I pay first in the US, should I pay first in Spain? I would say that the common agreement, let's say, is that you pay the taxes in Spain before, and then you credit those paid taxes towards your US filings after. Now, let's talk about how the tax brackets or progressive tax brackets work. And there is a common question for round numbers. This is illustrative purposes, ballpark figures only, just to understand how those brackets work. Is that people sometimes ask, if I make 100K taxable income, euros, would I pay 45% tax? Why people ask this? Because you can see on the right, there's a table, the different brackets that start at 19% go to 47%. If you see the fifth bracket goes from 60K to 300K, 45%. 100K is in that bracket, right? Should I pay 45% effective tax rate? The answer is no, okay? You will pay a sort of median or average of that tax rate, because the way it works is that you will be paying 19% tax for the first 12,450 euros that you make, 24% for the next 7,500 euros, 30% for the next bracket, 37% for the next bracket, etc. Therefore, the calculation on the left and on the bottom left corner will tell you that you will be paying an effective tax rate of 36% for 100K. And this is the way that generally progressive tax brackets work across the different taxes in Spain that use this system of progressive tax brackets, right? And a general calculation here, how much effective tax rate would I be paying on my taxable income? If you make 30K, you will be paying an effective tax rate of around 24%, 26% for 40K, 29% for 50K, 30% for 60K, 32% for 70K, 100 for 100K, you're paying, as we said, 36%. And this is just about income tax, okay? If you're working as autonomous, you also have to pay Social Security, etc., etc. We're just focusing on income tax, and we're not talking about allowances or deductions or anything, just so that you understand how the effective tax rate is calculated for the progressive tax brackets. Now, let's talk about the third tax obligation, the regional wealth tax and the national solidarity tax. First, the wealth tax is a regional tax. So depending where you move to, you will be liable or not for this tax that taxes the net value of your assets anywhere in the world, right? You have to calculate your net worth, okay, or net wealth, and the value of that net wealth as of December 31st of the taxable year, right? So, for example, if you move to Madrid, okay, the threshold for the regional wealth tax is 3 million euros. If your net worth is less than this, then you wouldn't be liable for paying wealth tax in Madrid. In Andalusia, you have the threshold is lower, but you have 100% rebate on the tax, making it effectively that you won't pay any regional wealth tax, okay? Valencia has now raised the threshold to 1 million euro, effective as of December 31st, 2025. Okay. But for example, Catalonia is one of the least favorable regions with the threshold of only 500,000 euros. Okay. So after that, and allowances and deductions and everything, you will start paying your regional wealth tax for Catalonia, right? We're going to see a calculation of how that would work. Now, there's something called the 60% rule, which is hard to explain, hard to understand, but basically it's for people who have very big wealth, but they have small income, okay? In this case, you can put a limit, okay, or a cap, okay, in which you can limit your tax liability to 60% of the regional wealth tax of your taxable income. So you can reduce it to up to 80%. So it's something to talk with your tax advisor, just to make sure that you're not paying more than necessary. Now, the filing for the regional wealth tax is June 30th, and we're going to talk about it, for the national wealth tax or solidarity tax is July 31st, so one month after, okay? So whatever you pay for the regional wealth tax, you can credit it towards the payment of the national solidarity tax. Now, the national solidarity tax is a temporary tax that never went away, and works more or less the same way as the regional wealth tax, except that it doesn't matter where you move to, you could be liable for it. The threshold, however, is much higher, with allowances and deductions, starts at 3 million euros, okay? And it works the same way. It has progressive tax brackets, okay, and it will also tax the net value of your assets regardless on where you live in Spain. As we said, in Valencia, they have raised the threshold for the regional wealth tax to 1 million, okay, which is great news because Valencia is probably the top destination for most expats moving to Spain right now, if I'm not wrong. And we're gonna see a calculation scenario. For example, someone who lives in Catalonia, okay, the different scenarios for the different amount of wealth that they calculate. But as we said, there are allowances in the case that you are owner of a property in Spain, yes, and that property, you can deduct 300,000 euros, up to 300,000 euros of the liable amount or taxable amount. Okay, so imagine that this person has a property of 300,000 euros somewhere in Spain. They can deduct 300,000 euros and add it to the threshold. Okay, so if the threshold in Catalonia is 500,000 euros, that is not liable for wealth tax. They can add 300,000 euros. Therefore, they have 800,000 euros allowance, let's say, that you can deduct from the taxable income. Now, if the total assets is 1 million euros, the taxable amount will be only 200,000 euros. In that case, they will be paying less than 500 euros per year. If it's 1.5 million, they would pay 3,000 euros. For 2 million, 8,000 euros, and for 2.5 million, almost 14,000 euros. And if you're making more than 3 million, remember that there could be some overlapping with the national solidarity tax. Okay, now that's how it works. Now let's talk a little bit, a couple of slides about digital nomads. Okay, what about taxes for digital nomads? Now you can move to Spain as using the digital nomad visa as an employee or as a contractor. There's these two options, right? If you move as an employee, it could be interesting because you could be potentially eligible for the Beckham law and therefore being able to get your 24% flat rate, as we mentioned before. Now, if you move as an employee, you will have to pay social security. The company that you work for will have to pay social security contributions, okay, for you either in the origin country. Just a quick moment. Over 60% of you watching right now aren't subscribed. That's a lot of people getting value without hitting that button. If my videos have helped you understand Spain's immigration process, visas, or life here, even just once, please subscribe now. I'm working hard to reach 10,000 subscribers by the end of 2025, and your click truly makes a difference. Thanks so much. Now, let's keep going. Okay, could be the UK, using the certificate of coverage, or in the US, using the certificate of coverage of the Social Security, right? For W-2 employees, right? And basically you move as an employee to Spain, right? And therefore you will have to pay your taxes on an annual basis. Now, if you move as a contractor or 1099 and you become an autonomo in Spain, as we mentioned before, you put potentially, almost for sure, you will not be eligible for the Beckham law. You will have to pay yourself the Spanish Social Security system, which will grant you access to public healthcare sector, pension, you will pay your pension, your unemployment benefits, and you will avoid having to have a private health insurance, for example, because you have promised to enroll in the Spanish Social Security system, with some caveats, okay? If you want to know more about this, join my Digital Nomad Visa webinar that I have every 15 days. But those are the requirements to apply for Digital Nomad Visa for contractors. Now, as a contractor, not only you will have to pay on a monthly basis your Social Security, but also you will have to pay the annual taxes and the quarterly taxes. One more thing about Social Security, the first year you will be paying around 80 euros. And then, depending on how much you make the first year, you will raise your Social Security to normally average 300 euros per month for the second year, and then the next year up to 600 euros, depending on how much income you made on the second year. Now, in some regions, you can get the money back of what you paid during the first year. That is the case of Madrid and Andalusia, the ones that I know, that you can get your 80 to 90 euros monthly back on Social Security during the first year. You will get it paid if you request it on the second year. Now, about the quarterly obligations that you have as a contractor in Spain, you will have to pay your income tax and the VAT that you gather. Okay, if you have Spanish customers, you will gather VAT from them, and then you will have to repay to the tax authorities that VAT that you have gathered on the quarterly basis. And in January, you also have to make an annual filing for how much VAT you have charged and paid during the previous year, right? So yeah, this is something that we mentioned. Now let's talk about specific case scenario of someone who arrives after July 2nd, so therefore less than 182 days in Spain to become a tax resident in Spain. Imagine this person is a real case, arrived to Spain in September, applied for the digital nomad visa in October, approved for DNB in November, and in December registered as autonomous, right? So this person is asking, how should I pay taxes for 2024? Because I'm not a Spanish tax resident. Should I pay taxes to Spain? Does it becoming an autonomous make me a tax resident? So there is a little discussion among tax experts here, but basically you're supposed to pay tax in the country where you're physically working. Okay, so strictly speaking, on any work performed from within Spain since September, even if those customers are outside of Spain. So you would pay taxes as a non-resident in 2024, and then you would pay taxes as a resident in 2025. This is more or less how it would go. So if you want to know more about digital nomads visa and the tax implications, go to my webinar there that you can join and also receive a recording, and there's a Q&A session at the end. And by the way, there's a Q&A session at the end of this webinar. You can ask your questions anytime in the chat box in the bottom right corner of your screen. Just make sure to add a question mark at the end. And if you have to leave early and you think that the information that I'm sharing with you today is useful, please leave a review in Trustpilot. There's a green bar there on the top with the red button. And it just takes literally 5 seconds just to push it and go there and leave a 5-star review. That would really motivate me and help others find this content. I really, really appreciate it. Now, let's continue with the webinar. There are some additional taxes in Spain. These are not the only ones, unfortunately, but probably the ones that you will come across once you move to Spain. There is inheritance and gift tax, which is a regional tax, so it will depend greatly depending on where you move in Spain. There is a saying that says that dying in Madrid is much more affordable than dying in Catalonia. This is true. Okay, generally Madrid is the best region where to move tax-wise, whereas Catalonia it has a high taxations for the different taxes, right? And this tax is paid by the HERE recipients, and there are different tax reductions or exemptions depending the region and the level of connection between the HERE recipient with the person leaving those inheritance or gifts. Now, there is also, especially when you buy property, if you buy newly built property, there's a national VAT tax that is a reduced VAT to 10% if you buy new property. Normally, there are different VATs, okay? You have 21%, you have 15, 10, and 4%, if I'm not wrong, for different products. For new properties, 10%. Now, if you buy secondhand property, you don't pay VAT, you would pay the transfer tax, or ITP, which, for example, different than the USA, similar tax. This tax you would pay when you sell the property, but in Spain, you pay the transfer tax when you buy it. The authorities give you only 60 days to pay in cash this transfer tax. For example, in Madrid is 6%, in Andalusia is 7%, in Catalonia, depending on the value of the property, or in Balearic Islands, it goes to 10%, 11%, also in Valencia. Okay, so there are big regional differences, right? So, for example, if you buy a property secondhand in Andalusia for 300,000 euros, you will have 60 days to pay 21,000 euros, 7% of that to the tax authorities, right? So it's something that you need to budget when you're buying property in Spain. Now, there is also a property tax once you are owner of a property, okay, which is much more affordable than, for example, in the USA, that I would say generally you would be paying annually in Spain what you are paying monthly in the USA for a similar property, or even less, okay, but it will have also strong variations depending on the region, depending on the city hall, the city where you are, the amenities, if there are swimming pools, the area, how large the properties are. There are pretty big variations, but generally also much lower than in the US. Now, let's talk about municipal capital gains tax. Okay, you have, once you sell a property, you have to pay potentially 1 or 2 taxes, right? That we're going to mention. So if you sell a property in Spain, you will have to pay capital gains tax for that property, okay, for personal income. And you will also have to pay a municipal capital gains tax, which is the city tax, depending on the variation of the price from when you bought it until you sold it. So these two taxes, okay, one is let's say national tax that you pay when you do your annual income tax declaration, and the other one is a tax that you pay to the city. Now, if you sell your property outside of Spain, you will only normally have to pay capital gains tax for that sale if you're a Spanish tax resident, of course, when that happened. Okay. Now, a lot of news came out because there's a housing crisis in Spain, and no one can discuss that. Well, and I would say like 99% of people want to move to the same places. There are places where there's no housing crisis at all, but no one wants to move there. Okay, but everyone wants to move to the coast and to the nice, good area. So in those places, definitely there is a housing crisis. The government wants to tackle this, and one of the announcements that the Prime Minister Pedro Sanchez did was that he wanted to raise the transfer tax for second-hand properties to 100% of the purchase price, okay, to non-EU passport holders who are also non-residents at the time of buying the property, okay? So this combination, non-EU and non-resident. So if you're non-EU but you are resident, for example, you will not be touched by this potential change in the law. Now, I have interviewed immigration lawyer Ainhoa Manero of Sterna Abogados, who I highly recommend. I have personally used. I have interviewed Marcos Gonzalez, who is a tax lawyer, okay, who works tightly with Ainhoa, okay. About this, I made 3 videos and also following up this news, and it is highly, highly unlikely that they can apply something like this, okay. But it is not totally overruled. It is a potential thing that can happen, but it would go against the principle of European Union of movement of capitals and right of movement of people. Therefore, it would be very, very easily challenged in the court if any rule like this comes up. So I wouldn't be worried. And in any case, if you become a resident in Spain, you wouldn't be touched by this. Okay. And just to go a little bit more into this, there is absolutely no way that such a rule will have an impact in the housing crisis, because only 2.7% of the transactions in 2024 were made by non-EU non-residents in Spain. Okay, so this is a totally political announcement just to have some headlines, in my opinion, unfortunately. Now let's talk about capital gains tax. Capital gains tax. How can I avoid the Spanish capital gains tax? And especially for people who come from jurisdictions where there's no capital gains tax, it would be quite disappointing to have to pay capital gains tax. There are mitigation ways of this tax. If you're older than 65 years old, if you are selling your primary property, if you reinvest the proceeds into a primary property in Spain, there are several things you can do to mitigate or even not pay this tax, even if you would be liable for this tax because you're a Spanish tax resident when this happened. But the best way is to avoid it altogether by timing your move to Spain, so that when you sell your property, you are not a Spanish tax resident during that tax year. The best way to understand it, as we said, the tax year is a calendar year from January 1st to December 31st. So every January 1st, the clock goes to 0. It's a new tax year. Therefore, if you sell your property in December 31st and you move on January 1st to Spain, they fall into different tax years, right? So therefore, you're not liable for that event, okay, for that sale. Now, if you sell your home in your origin country during the same tax year, make sure to spend less than 193 days during that calendar year, so you're not considered a tax resident when that happened, therefore not being liable for capital gains tax in Spain, right? Now, the progressive tax brackets, the way to calculate work the same as the personal income tax. It's just that the tax brackets are different for the CGT because they go from 19% to 30%, right? And as I mentioned before, if you're selling a property in Spain, the difference between CGT and plusvalía municipal, which is the local tax that you need to pay, are calculated very differently, okay? And let's see a normal calculation for CGT case scenario. Imagine that you purchased your property for 100K in the past. the sales price was 200K, you made a capital gain of 100K. How do you calculate those progressive tax bracket for 100K? Those are the progressive tax brackets. So the calculation would be you will be paying 19% for the first 6,000 euros, 21% for the following 44K, and 23% for the following 50K. Total 100K of capital gain, you will be paying an effective tax rate of 22%. Now, let's talk about whether pensions are taxable in Spain. And this is important because many people choose to retire in Spain, but thanks God, there are agreements between the different countries. Spain has many tax agreements with many different countries, including the US, UK, Canada, Australia, etc. Right? So it's very important that you understand that existence of those agreements. But let's start formally that normally your pension would be taxable as ordinary income. Therefore, if you're a Spanish tax resident, you would be paying taxes on your pension, okay? And there are different thresholds for declaring those pensions, but if you're getting your pension from abroad, you have to normally declare anyways because of this. If you have a sole income source, the threshold to declare is 22,000 euros, but if you have multiple income sources, the threshold goes down to 12,000 aggregated income and 1,500 euros only for secondary sources, and pensions from abroad appear as a second payer, so they are greater if they are greater than 1.5k euros per year. A declaration must be made, and progressive tax rates of 19% to 47% will apply, as we saw. But depending on the type of pension, potentially it is not taxable because there are specific rules for US, UK, and other countries where basically Social Security and private pensions are taxable, but government pensions or public pensions are exempt, okay? Now, some people argue that if you become a Spaniard later on, you would lose the right to be considered a citizen of the other country, because, for example, if Spain requires that you renounce for your citizenship when you obtain your Spanish passport, not in every case, but generally if you become Spanish citizenship by residency after 10 years, if you're a holder of UK American passport, Spanish authorities will make you resign, okay, or promise that you will resign, but this is not enforceable. Really, no one does it, okay? And you will lose the protection, let's say, of the dual taxation agreement that makes the public or government pensions not taxable by Spanish authorities. Some people argue this. I asked Ainhoa Manero about this, and she says this doesn't work this way, but I haven't spoken to anyone. I could not find anyone who was in this situation, okay? So something you need to have in mind if that is your case. Now, allowances for pensioners for ages 65 to 74 is 6,700 euros annual allowance, and if you are over 75, it's 8,100 euros annual allowance. Now, let's take off this bar. Taxation of American 401ks and Roth IRAs in Spain. So 401ks taxation, the distributions are taxed as general income, traditionally exempt from Modelo 720 reporting, but some people and some tax advisors say that still need to be included in 720. The Roth IRAs taxation, the investment gains are taxed as income at progressive rates, income investment up to 30%, and must be reported in 720 Modelo annually based on the account surrender value as of December 31st, okay? And it potentially could be subject to wealth tax or national solidarity tax. And as we mentioned before, there are some things that you need to know because 401ks, it was exempt from the 720 reporting, but some some individual asked the opinion to Spanish tax authorities about this, and the tax authorities said, no, the 401k should be reported in Modelo 720, but as you know, the Spanish tax authorities are not judges, okay? This is the interpretation that they give it, but so far I have not more information. So depending which tax advisor you will be working, they will tell you, or they will give you the options, or riskier or less riskier, being on the safe side or not, okay, to be compliant. But the 401k, it is not 100% clear whether it should be declaring the 720 or not. So always refer to an experienced tax advisor you can find on Spainguru.es. And remember, you can always read Spainguru's blog posts, as I said, almost 2,000 blog posts, many of them about taxation, especially focusing in UK, US nationals, and more. Now, non-lucrative visa. Okay, for non-lucrative visa holders, people who are retired, or people who are not working in Spain, you have to become a tax resident in order to renew my NLV. And this question is coming all the time lately because a new reglamento de extranjería or bylaw that regulates the main organic law has changed effective last May 20th, 2025, and where they included a minimum stay requirement of 183 days in Spain if you want to renew your non-lucrative visa and any other temporary visa. Okay. Now I have there is let's say a legal ambiguity in here, and the answer to the question is that no, you don't have to become a tax resident in Spain in order to renew your non-lucrative visa. I'm talking about only the renewal of the visa, not if you pretend to obtain the long-term residency later or the Spanish citizenship. They have their own minimum stay requirements that overlap with the renewal minimum stay requirements. But now we're focusing in, if you only want to renew your non-lucrative visa, do I have to stay 183 days? And the answer is no. I have interviewed Ainhoa Manero in this interview, okay, where she says, and she explains that there is a Supreme Court ruling that states that the minimum stay requirement for the renewal of a visa should be included in the main law, which is the organic law for 2000, okay? And this law has not changed in many years. What they changed is the regulation of this law, which is lower in the hierarchy, okay? Therefore, if the Supreme Court says that this minimum stay requirement is not valid, is not enforceable, they will have to delete this minimum stay requirement. Or if they don't renew your visa because of this reason, it is very easy to bring this to court and win 100% of cases. This is what she says in the video. But of course, I'm not an immigration lawyer. This is not legal advice. Please watch the video and listen these words from her directly. Okay, so another thing to have into account is that the tax year and the immigration year are different. Tax year are calendar years, the immigration years are natural year. If you arrive to Spain on July 2nd, 2026, the immigration year for renewal purposes goes to July 2nd, 2027, okay, which may or not overlap with the tax year that begins on January 1st. Okay, so there are different things and people tend to mix these concepts. Okay, if you want to obtain the NLV and not become a tax resident, okay, engage with an experienced lawyer and tax advisor that you can find on Spainguru.es. They will tell you the best strategy. If you plan to stay longer in Spain and try to obtain the long-term residency visa, etc., you will potentially have to become a Spanish tax resident because you have more strict minimum stay requirements. Now, let's sum up everything that we said in one single cheat sheet here, where I try to put everything in one single place for you, okay? Remember that I'm recording this and I will send it to you by email, the link on YouTube, okay? And you will be able to watch this again, right? So let's talk about first, Spanish tax residency in Spain. Remember, more than 183 days in a calendar year, you will become a Spanish tax resident, and there are two other more conditions. What happens when you become a Spanish tax resident? You will be paid taxes on your global income and potentially on the net value of your assets. Key tax obligations. First, Modelo 720, where you disclose your overseas assets value, okay, in different categories over 50,000 euros. Second, personal income tax. You would pay an annual personal income tax on June 30th, okay? But if you're a contractor, you will also have to pay on a quarterly basis as well. Wealth is a regional tax, wealth tax. That tax is the net value of your assets, but there are strong variations depending on the regions, but with lower thresholds. And the national solidarity tax that starts at 3 million and is national and is regardless where you move in Spain. Special tax regime, the Beckham law. Normally, eligibility is for employees who move to Spain, okay, with a flat rate of 24% on the income taxes for income sourced from Spain, with more perks. But if you make less than 55,000 euros per year, probably not the way to go. Then taxation of pensions. Normally, Social Security and private pensions are taxable, but government pensions may be exempt. Okay, government or public pensions, according to the dual agreements between Spain, US, UK, and other countries. Now, taxations of US investment accounts for 1K tax as general income, progressive rates up to 47%. Roth IRAs investment gains tax up to 30%. And Modelo 720, probably you need to declare as well those type of accounts. Taxes for digital nomads. If you're an employee, remember Social Security is paid by your company, either in your origin country or if they open a company in Spain. And if you move as a contractor, you have to pay your own Social Security on a monthly basis. Okay. Additional taxes that we mentioned as well: inheritance and gift tax, regional taxes, property tax when you own a property, capital gains tax, CGT, when you sell a property, for example, or other rights. We talked about transfer tax for second-hand properties that depend greatly on the region that you need to pay when you buy. And we already mentioned the different deadlines. For 724 is March 31st. For personal income tax is June 30th. For regional wealth tax, June 30th. For the solidarity tax is July 31st. And quarterly payments of income and VAT for the self-employed. Okay, remember that. You can always find professionals to help you with all this on Spainguru.es. And here is a nicer calendar with all the dates for the different liabilities and different deadlines for the different taxes in Spain, depending on your situation. As I mentioned, if you need professional advice, you can find immigration expert, tax advisor, financial planners on Spainguru.es. You can consult with them just 1 hour, just to make sure that your ideas are are applicable when you move to Spain. Or you can also get software or gestores or accountants on Spainguru.es that can help you with the filings in Spain, in the US, as a contractor, as a retiree, as an autonomo. It doesn't matter. You can find everything on Spainguru.es. Okay, and if you're applying for visas, you can find health insurance that are compliant for the visas, medical certificates, sworn translations, apostille services, and many more services like bank accounts, currency conversion services with discounts on Spainguru, money transfer services, trusted ones, property rentals, mortgages. If you're planning to buy property in Spain and you don't have financial history in Spain, we can get you a mortgage via my recommended brokers, and so much more, all personally vetted by me. And I have been recommending these services for several years. They have stood the test of time, and everybody has been very much happy with them. You can also join my other webinars. I can see some people connected that are joining several of my webinars. Thank you so much for joining the different webinars. I really appreciate. And before we go into the Q&A session, do you remember that you can always write me an email to hello@spainguru.es. Okay, I always answer my emails, at least pointing you in the right direction, hopefully. And let's go to the Q&A session. If you have to leave before the Q&A session, please remember to leave a review on Trustpilot if you want. It really helps me. Thank you so much. And let's go to the questions. I only see one question here. Let's display it. Probably a question that I cannot answer because I'm not so knowledgeable on how the 401 TSP is taxed in the US. It's a US government 401 TSP tax, or is it exempt? I don't know. This is a very technical question. You need to engage with a professional, okay, tax advisor, and ask this. You will need to send your papers to this person, okay, and the person will study it, okay, and see if how that would be considered by the Spanish tax authorities, okay. And in general, if you're, for example, I don't know, a teacher, you're receiving a teacher pension, for example, which is a public or government pension, whatever, I would tell you it is exempt as per the dual taxation agreement between Spain and your home country, okay, in most of cases. But still, I would confirm with the Spanish expert tax advisor knowledgeable of these situations, which are the ones that I recommend Spainguru.es, because I send them many people from the US, UK, Canada, etc., and they're quite experienced with the different type of pensions or savings accounts, 401ks, Roth IRAs, and some of them, they also have studied in the US. Even if they are not maybe registered CPAs, they know how that works. because there's no, a lot of people ask, do you know a tax advisor that can file me, one tax advisor that can file me taxes in the US and in Spain, for example? That doesn't exist. It doesn't exist. You need to work with two, okay, or with a software in the US, for example, for tax filings, and you're a tax advisor in Spain, because you can only be expert in one jurisdiction. This is, I haven't known in years someone who can handle both things at the same time. And the ones who say they can, I really like, probably they're too expensive to be paid, unfortunately. So I can see someone has asked another question. Let's try to publish it if I can. Here, display. Whoa, a long one. Thank you for joining today. I am a tax resident since 2024. In 2026, I plan to return to my home country, Malaysia, to further study, and will spend less than 183 days in Spain. However, my husband, legal spouse, will continue to be a tax resident in Spain due to work. I'm not employed in Spain and do not have any Spanish income. All my income and properties are derived from Malaysia. Malaysia has a double taxation agreement with Spain. Do I have to pay taxes in Spain for 2026? As under the DTA, I should be Malaysia tax resident. It's very hard to tell. You imagine for me to tell you whether you're gonna have to be paying taxes. What I know is that there are different conditions to be a tax resident in Spain. I don't know the conditions in Malaysia, right? So you need to read the agreement if you want to answer this question by yourself, okay, without any tax advisory. Read the agreement between those two countries and read the tiebreaker rules to understand whether you would be considered to be a tax resident in one country or in another, okay? Now, there is one of the conditions that is that even if you spend less than 183 days in Spain in a calendar year, the third condition is your family lives in Spain. You have personal ties to Spain. The Spanish tax authorities could consider that you were still a Spanish tax resident during that year because your husband is working in Spain, okay? That could be. It's a possibility. I can already tell you this. So you should, like, in a way, try to determine which would stand up according to the double taxation agreement that you have for those two countries, right? Now, if you imagine you were alone and you have to leave Spain, you need to make it clear that you live in Spain. You normally would file the form 030 or form 30, that where you communicate that any changes in your, let's say, tax situation, okay? Where you're saying, like, I'm not gonna be living in Spain, okay? You file this and you make it clear, you make a clear declaration to Spanish tax authorities that you are not living in Spain. That's at least the minimum thing that you need to do to communicate to the Spanish tax authorities. Potentially more things. As I said, I'm not a tax advisor myself, but definitely you need to inform the tax authorities and not just leave the country, and think that this is just finished. You need to communicate those changes, okay? Next question. I have another question here. Thank you for joining today. How much a tax advisor could cost you your taxes in Andalusia? Well, it depends how complex your situation is. Really. The more complex, the more they charge you. They can charge you, and also your work situation. For example, if you're a contractor and you need to declare taxes every quarter, and you need, a gestor, the minimum thing a gestor will charge you is about 50 euros per month for a contractor, okay? So for you dealing with your invoices, and submitting your taxes every quarter and annually. So they will charge you at least 50 euros plus the annual taxes. This is the minimum, okay? Now, if you just want to engage with a consultation, depending on who you are consulting with, okay? If you want to run, let's say, a simulation of your taxes before moving to the country, that has a specific cost. But first, you need to consult with the tax advisors, because depending on your situation, the simulation will be more or less complex. So all this is pretty customizable in a way, right? The prices are customizable. So, and depending who you talk to, okay, some tax advisors are very, very expensive, okay, because they know their deal and they can charge that, okay, and other tax advisors are a bit less, okay, because they want to gain more market, right? So you need to ask that directly to them and with your specific case. But yeah, it could be anything from 50 euros onwards. A simulation could cost 200 euros, for example, to say something, okay? But and again, depending, some tax advisors or accountants will also maybe deduct some of the initial consultations if you hire their services for ongoing declaration, and deduct the previous costs to put it in a bundle or package for you. So yeah, there's so many things that could happen. All right, I don't have any more questions. Okay, I hope that I answered, or at least point you in the right direction. I want to show you before we leave. This is Spainguru here, and here you go to services. Here you have tax advice for Spain filings, okay, or consultations, online gestores or accountants. You have a couple of I would say softwares for filing in the Spain. For the US, I have a software for especially for expats, okay, or Americans living abroad, immigrants. And of course, you can join the, well, you're already in the Spanish tax webinar. You can join today and read more articles about this. Okay, and you also have financial services. Okay, this is more for wealth management and for, let's say, investments to manage your risk, avoid or reduce the risk in the currency fluctuations. I'd recommend SJB Global, based in Marbella, that deal with Americans, especially Americans, UK, and other expats moving to Spain, mortgage in Spain, banks and money transfer, and different things related to finance and tax advice you can find on Spainguru. And yeah, basically those things are the most relevant things for you that you are joining today to the Spanish tax webinars. So yeah, I don't have any more questions. I really appreciate that you joined today, and it's almost 1 p.m. And thank you so much for joining. You will receive the recording very soon on your emails, and we'll stay in touch. Take care and have a wonderful time. Bye-bye.